DeepSeek, deep in your you mean? I apologize. That's not how I wanted to start off this video. But I believe for investors that are plugged into the investing world over the past few days, this is probably how you're feeling. You have many different people, different parties, all spreading their own narrative and opinions around this new Chinese AI startup. Don't worry, this video, I only have one slide prepared specific to DeepSeek, but more importantly, I just wanted to share my real-time thoughts, my own portfolio development and actions. In the last part, I'm just going to discuss a little bit about Alibaba's LLM or AI answer, which is with 同义千文 or Quen in English. So before we dive into it, clearly DeepSeek is deep in Nvidia's ass. So it has caused the largest or the biggest single day stock decline on the 27th of January, where it wiped out more than $560 billion worth of shareholder value. And interestingly enough, it's Nvidia that has experienced the past 8 out of the 10 biggest single day stock decline. So I think just a side note here that I wish to raise is that as you realize many of these mega conglomerate grow in value after they breach 3 trillion, then 4 trillion, marching up to 5 trillion, it's usually these big tech companies that can experience a significant enough drawdown to go into this ranking. So that's why you see Nvidia being the poster child of this entire AI revolution. That's why they are experiencing the greatest amount of volatility. Not so much because Nvidia is a bad company, but more so because as we are writing this entire chapter of the AI revolution, there's a lot of uncertainty. We don't know the level or amount of productivity that it's going to create. That's why investors, both bullish and bearish, are going to have their conviction being tested as we allow for the market to do their value or price recognition. So specific to Nvidia, because of this new DeepSeek development, it has caused a lot of uncertainty. Hence, the biggest single day stock decline. So of course, as always, a very big disclaimer, I'm not an expert in the AI field. I do read a bit here and there to try to level up my own knowledge, but just take my entire analysis with a pinch of salt. And I'm just going to give you a very layman summary of how I understand the entire space, and you can then have a very civil discourse in the comments. Please, I emphasize on the idea of civil discourse. So DeepSeek in one slide as promised is that they were able to outperform or benchmark against some of the leading US-based AI model, specifically ChatGPT 4o, at a fraction of the cost, almost 90 to 95% cheaper. Especially, I think also understanding the context of ongoing export and network restrictions. And the surprising thing, DeepSeek is still able to come up with a competitive enough model. So if you think about it, I think most of the value creation in the US stock market in the past 24 months was actually predicated on the entire AI revolution story and the expectations of building out this entire AI supply chain in years to come. That the stock market is a forward-looking mechanism. That's why humongous amount of capital is being injected into the US market to place their bets on this current worldview moving forward. So they're expecting to build out this entire AI supply chain, arguably the next era taking over the internet development of the 2000s. And this new breakthrough from DeepSeek has basically called into question, and it's an existential question, and to question whether their existing reasoning or expectations are fair or not. Hence, this huge amount of volatility. So here are a few things that are exciting about DeepSeek today. So firstly, it's this idea of chain of thought prompting. So the chain of thought prompting encourages the model to basically think out loud or provide step-by-step reasoning in its responses. For example, when solving math problems, it will show each step of its work. So this approach not only allows for identifying mistakes more easily, but also makes it possible for the model to self-evaluate and improve its accuracy through reprompting or re-evaluation of its steps. So I don't believe this chain of thought prompting is entirely new or innovative, but I think DeepSeek managed to bring it to the next level. That it's also open sourced and developers can toy with it however they want to and even run it on their own servers. And this basically denounced those naysayers saying that China is trying to harvest data through this DeepSeek model because you can do it offline on your own grid. So in this way, it really gives developers and even users the peace of mind if they really want to use it for commercial or even private purposes. And by translation, if DeepSeek is really able to deliver whatever that is promised based on all this preliminary information, I think the expected amount of energy and electricity required to train and to deploy these models will scale back significantly. So not only does it benefit both users and enterprises on a cost-efficient efficiency point of view, but more importantly, it's really the increased accessibility. So on the flip side, however, the ongoing criticisms of DeepSeek goes as follows. Firstly, I think many people are skeptical, especially those on Wall Street and in the tech scene, regarding the chips and the associated costs with DeepSeek, as they're probably understated due to the ongoing export restrictions and also how they're able to manage their supply chain and network. And of course, they always tag on to this whole idea of a China discount, meaning to say some of this data are probably over-exaggerated due to the inherent untrustworthiness coming out from China. And secondly, it's also these allegations around data theft and unethical usage of their competitors' models. So putting aside the technical and practical implications of DeepSeek, I think I just wanted to offer a framework into how we should think about DeepSeek. So I'm just going to quote by a good friend, Bunty, and here's how we try to break it down. So the AI ecosystem has several layers. The first layer, you have your fab equipment suppliers like ASML that provides lithography machines to create the high-end chips. Secondly, down the line, you have fabs like TSMC that manufactures the chips. Thirdly, you have people like Nvidia that are designing the chips and they develop the platform and libraries for the AI workload. And fourthly, you have the application companies like OpenAI, Anthropic, Google, and Meta that train their LLM using Nvidia's chips and libraries. So if you really think about it, DeepSeek is disrupting the field, but it's mainly the fourth layer, competing with OpenAI and Meta on the entire application ecosystem. So even if DeepSeek proves to be exceptional and other competitors cannot catch up, so training and inference on their entire model will still likely rely on NVIDIA GPUs. And for now, we don't see any close competitors. So efficient models increase output per unit of compute, lowers costs, and it drives wider adoption. And this enables more advanced application. So that said, NVIDIA does face potential competition. AMD could challenge with a better CUDA alternative, Google's TPU or hyperscalers custom ASIC could achieve breakthroughs, or companies like Cerebras or Grok might deliver high-performance chip at competitive prices. But so far, progress from these players have been limited, though it's still early. So of course, Bunty being a great NVIDIA bull, he's trying to make the investment case around DeepSeek versus NVIDIA. So currently for myself, I'm looking through the entire value chain. I do have a few companies on the application layer, like Google and Meta, and I also have an okay position in the chip manufacturer, which is TSMC. Then, the natural question would then be, what did I do to take advantage of the past few days' volatility? So in all transparency, I actually started a very small position in ASML. So from my understanding, I don't profess to be an expert in the whole lithography and semiconductor space, but I will explain my rationale later on. But just so you know, I've started ASML as a small position. It's currently under 1% exposure. For whatever it's worth, I'm now an ASML shareholder as well. So before we go into the reasoning of why I added to ASML rather than NVIDIA or any of the other companies in the supply chain, I wanted to go through this idea or concept called the Jevons paradox. So it's actually Satya Nadella, who's the CEO of Microsoft, that tweeted or X'd out not long after the entire DeepSeek development. So Jevons paradox strikes again. As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity, and we just can't get enough of. So right after this tweet with this Wikipedia link, so the traffic to an obscure wiki page actually grew nearly 200x. And clearly, we know who's the real influencer that is able to drive traffic. But more importantly, I think you have to get comfortable with this idea of a Jevons paradox, because it's predicated or it underlies the entire investing thesis around some of this semiconductor related or even some of these AI tech names. So what is the Jevons paradox? So in economics, this usually occurs when tech advancement make a resource more efficient to use, thereby reducing the amount needed for a single application. However, as the cost of using the resources drop, overall demand increases, causing total resource consumption to rise. And in one case that we can all appreciate is that fuel efficiency gains tend to increase, not decrease fuel use. And in today's context, you see that the new cars are so efficient that everyone is driving everywhere these days. So circling back to this entire AI discussion, I believe that large language models like ChatGPT, DeepSeek, Anthropic, they are still not widely adopted. Yes, I do understand that mostly knowledge-based workers are slowly trying to step up their game, but it's still very reserved for some of the top few people in their field, especially with the ongoing subscription costs and the limit as to how you are able to take advantage of some of these models. So with that in mind, if you do hold the worldview that the idea of large language models being deeply integrated into everybody's life in the foreseeable 10, 20 years later, then this is exactly like the transport, electricity, or even internet revolution. And if that's your base case and you think that demand is going to continuously skyrocket with a very long tailwind to come, then yes, you're probably remotely interested in trying to get a position here. So going back to my reasoning on why I added to ASML, this is a very stripped down version of the so-called AI value chain. And as you know, DeepSeek has basically slaughtered itself into the software infrastructure where you have the different models competing with OpenAI, Anthropic, Meta, etc. etc. ASML creates the machine for TSMC to create the chip, for NVIDIA to sell the chip, for them to create the large language model. And in this case, a lot of investors are arguing that NVIDIA is providing the shovel in this gold rush because NVIDIA's GPUs are getting more and more valuable due to the computing and demand needs. But if you really think about it, they are all selling shovels in this entire AI gold rush to the next one down in line. So I've already owned a sizable exposure in TSMC, which has benefited greatly from this entire AI gold rush. And really judging from it, if I were to just bet on this whole LLM monster that they're creating, going into this software infrastructure space, I think it's an incredible Red Sea. It's extra, ultra competitive, and I don't have any insights as to who is going to come up superior over the other competitors. Going up the line, I think NVIDIA right now is the undisputed king. That's why they're able to command such a high valuation. And other investors are not blind to this context as well. So they have the highest margins and they have the highest demand, and inevitably, they're going to have the highest level of competition. So I think here's the risk reward that you probably will have to grapple with as an existing or even as a potential investor. So you either choose to invest upstream or up the chain, like ASML and TSMC. So both of them are monopolies in their own right, due to the specific nature of the semiconductor industry, the R&D, the capex, the investment timeline. I think you can go and read more about why they are the undisputed leader. And because they're upchain and they're in the hardware business, their margins are going to take a hit. They don't get to enjoy 80-90% gross margins. I think it's closer to 50%. But that's it. They're still great companies, but it's just that you can't expect that humongous amount of increase in free cash flow because they are kind of limited by their pricing power and also the practical concerns. But that's it. I think if you do believe in this tailwind of this AI infrastructure build out, there are still great companies to invest in. Or on the other hand, you want to reap greater rewards from some of these NVIDIA fabless designers. They have great amount of margins. They can command high ticket prices because all these companies are heavily reliant on NVIDIA. And you're talking about all these hyperscalers with deep pockets. But that's it. Because it's a glorious and exciting business, that's why you have a lot of competition coming in. So I think back to your own personal investment philosophy, you have to weigh your own pros and cons and where you decide to insert yourself or where you decide to insert into your portfolio allocation. So don't be mistaken, the AI value chain is not so simple. So here's the AI semiconductor value chain with a lot more companies, but I think I just wanted to share my own thought process on how I look at some of these specific companies in my watch list. And a special shout out to Eric who created this Canva design. So Alibaba's Quen released this tweet a day after on the 28th. I'm saying that, so the burst of DeepSeek version 3 has attracted attention from the whole AI community to large-scale MOE models. Concurrently, we have also been building Quen 2.5 Max, which is a large-scale mixture of expert LLM, pre-trained on massive data and post-trained with curated recipes. So it achieved competitive performance against top-tier models, and it outcompetes DeepSeek version 3 in some of these benchmarks being shown here. And looking at Alibaba's price action, you can see that investors are basically gobbling up all these AI developments. And on the 28th, when they release the results of performance with regards to Quen, you can see this huge green bar, and they have been continuing this upward momentum as investors are trying to reprice their expectations around the AI developments of Alibaba. So before going any further from here, I think I just wanted to play a very quick video from China Observer talking about some of these investors' expectations and excitement leading up to this whole discussions about how the Chinese government is going to set a floor to stock prices and stock valuations, and how they're going to introduce a stimulus at a scale never seen before. And the stock market basically reacted extremely positively. I'm looking at the previous cycle of optimism, where Alibaba actually traded up near to $118 per share, and subsequently the excitement died down again.
Oh my god, it's skyrocketing! A bull market! I'm getting rich! This kind of market is a once-in-a-lifetime opportunity, and I managed to catch it! Who was celebrating the market surge with tears of joy the day before could never have predicted that next day they would face a market crash. Yesterday it was a bull market. I made 90,000 yuan, but today I lost 140,000 yuan, including both principal and profit. All the stocks I held hit their daily limit down. I imagined 1,000 different outcomes, but I never thought it would drop 5,000 points and that over 4,000 stocks would fall more than 10%.
This is my second day trading stocks. It's now 3 p.m. on October 9th and the market has closed. I've lost 56,000 yuan. I even tried to buy the dip today with another 100,000 yuan, but the more it dropped. And weren't they supposed to revitalize the market? Where's the intervention? And what happened to the Shanghai Composite Index?
Today is the worst day in my entire investment history. My personal account lost 35,000 yuan, and the 300,000 yuan I invested in ETFs lost 47,000. Combined, I've lost over 80,000 yuan. Oh my god.
And so I've lost 1.2 million yuan. I'm numb from the losses. This market is so unfriendly to new investors. Out of 5,000 stocks, more than 4,000 dropped, with losses of over 5%.
To this.
With this wave, out with the old and in with the new. New investors are now becoming old ones. Those who were finally freed from losses yesterday are now stuck again today, losing 1.87 million yuan. I have two pieces of news. The good news is I made over 10,000 yuan on my semiconductor stocks. The bad news is my other stocks have tanked such a familiar feeling.
On that note, please remember to smash that like button. But I think I just wanted to err on the side of caution here with regards to investors' optimism. Whether is it on government stimulus measures or even today, I'm talking about this whole AI hype cycle. I'm not saying that Alibaba will not benefit, but I'm just trying to emphasize on the fact that don't be baited into many of these FOMO and pessimism cycle, and try to focus more in terms of the fundamental developments, and more importantly, the stock market is always a weighing machine for companies' earnings. So let's dive deeper into Alibaba's usage of AI and their developments. So let's not kid ourselves. For many of these tech companies, whether is it US tech or Chinese tech, or Tencent, your Baba, in US, your Google, your Meta, your Amazon, they have been huge proponents of using artificial intelligence in many forms in their core businesses. So it's not necessarily a new integration per se, but I think investors are just getting extremely excited about the future. So just to jog your memory a little, I think since 2015, Alibaba has already started to implement AI-related chatbots. Maybe not as sophisticated as today due to the new breakthroughs of large language models, but they have been using chatbots. And they have supplemented human interactions. Through the years of refinement and sophistication, today, AI chatbots actually handle customer engagements for more than 2 million daily sessions and 10 million lines of daily conversations, representing 75% on Alibaba's online and 40% of their phone consult. AI chatbot integration managed to raise customer satisfaction by 25% and have saved them on 1 billion RMB in terms of costs from human agents. Since 2017-18, Alibaba also introduced NLP, which is natural language processing, as a function in their cloud, specifically for review quality and authenticity analysis. And I think it's specifically for e-commerce platforms like Alibaba, it's integral for reviews to be authentic and of quality. So they also help analyze the most influential factors specific to negative reviews that affects their conversion rate, and they then pass on this feedback and data to the merchants so that they can work on these insights to improve their product quality and to help drive conversions. So Qwen, which is Alibaba's generative AI model, is also being rolled out business-wide as we're talking. So they integrate it into Tmall Genie Smart Speaker, which is basically Amazon's Alexa. So they integrated it into DingTalk, which is something like a Microsoft Teams or Slack, to basically help summarize meeting minutes and to generate sales proposal. They also integrated it into the cloud so users can actually build their own customized LLM for business use case. So these are just some of the ways that they're talking about this whole AI thing that they have already been implementing over the past 5-8 years or so. Going back to Alibaba's investment case, so their core business is still in e-commerce. So looking back at Alibaba's own commerce experience, they actually beta tested in September of 2023 their LLM-powered Taobao Wenwen, basically Ask Anything Taobao. So it's essentially a shopping assistant that generates detailed product recommendations, along with further questions to guide consumer purchasing decisions, and they include multimedia content like short videos and even live stream. So they help summarize pros and cons of similar products and reviews, and they help user to lock in best deals and obtain instant pricing analysis. And this is a basically wet dream come true from a consumer point of view. But that said, also don't forget that consumers are not homogeneous in nature. Some people really just like to spend time on the e-commerce platform to just browse through as a social media platform. On the other hand, consumers like myself, we just want an answer quick and we just want to get the shopping done. We don't want to spend too much time on these platforms. So this new integration, I think it's targeted to people like me. So on top of just benefiting the consumers, I think they also increase the operating efficiencies of merchants, where Taobao and Tmall actually rolled out 10 AI tools to merchants in 2024 that include Gen AI applications to create images and marketing content, customer service chatbots, and AI-based business analytics. So AI tools were used more than 1.5 billion times during the 11/11 event last year. So visual generation tools include manipulation of models, backgrounds, styles, etc. And their text generation basically provides product details, titles, description, trending keywords, etc. And the Business Advisor AI provides real-time updates and insights to help merchants optimize their product assortment. And Ali Xiaomi, which is Ali Assistant, answers inquiries and requests, product recommendations, sales and discounts, order tracking, exchanges, and returns. So you can see that it's really a full suite integration and enhancement to the consumer experience on the core e-commerce platform. And that's basically how they're benefiting and using or exploiting their AI development. So the natural question would then be, what do we do now? Do we add more to our Baba position? Do I buy other Chinese tech companies? Or what should I do? I think this is an intimate and a very personal portfolio decision question, but I think there's a reason why I do still hold Alibaba and Tencent at a very sizable exposure in my own personal portfolio. I think my conviction, or at least my portfolio allocation, speaks to the volume of where I see the valuations, the fundamentals, how they're developing. And of course, let's not discount the fact that, hey, this whole AI integration and development is not part of my initial Baba thesis. We already know that AI or some sort of a technology advancement is already in the blood or DNA of many of these leading tech companies. It's just that you don't necessarily spell it out saying that, Alibaba is going to be a great competitor to OpenAI or to DeepSeek or whoever, insert competitor name here. So really, it's just the trust in terms of the culture, the management, the investment, the capital allocation play out in this entire competitive landscape. So really just try to focus back to first principles on what causes share price to move. Of course, definitely you have revenue growth, and more importantly, it's profits, earnings per share. So judging from how Alibaba is expected to grow revenue in the coming 3 years, it's in the range of 6 to 8%, and their earnings per share, they're expected to grow between 9 to 12%. So do you expect all this integration, this core commerce experience, how they're able to fight off competition? Are they able to grow their top line and bottom line meaningfully in the foreseeable future? Whether it's in new business units as well. You have cloud, you have international commerce, also adding to this growth rate. But if you are more optimistic than the current street consensus, then I do think that Alibaba is still severely undervalued now, and not forgetting the fact of the macro conditions and how people are repricing the equity due to many of these challenges and I guess headwinds per se. Last slide, I think final thoughts about Chinese tech is that I think Baba and Tencent is really at the pinnacle. Of course, you have ByteDance and Meituan today as well. So there was a running saying in the Chinese tech investment space, I think 20 years ago, was that you have the 3 top tech companies that are called BAT. I'm not trying to insinuate a particular pandemic or whatnot, but BAT represents Baidu, Alibaba, Tencent. Over the years or so, I think Baidu has really lost their core competitive advantage. I think search is being decimated by ByteDance, TikTok, Xiaohongshu, whoever it is, Weibo. So I think Baidu has really lost its mojo. They are now going all in into their robotaxi network. So I'm not too sure about the technology development there because I don't really follow the autonomous driving space. But I think the new bet is called ByteDance, Alibaba and Tencent. So because ByteDance is not listed, so they changed up the terminology to call ATM, which is Alibaba, Tencent, and Meituan. So I think just looking at the dragon heads today, the 3 dragon head, Alibaba, Tencent, and Meituan, in the publicly listed market, they're probably going to do you okay. Of course, you have to consider the valuations, the entry price, and what kind of expectations you expect them to move forward from here. But I think they're still extremely strong companies with a very big, large network foothold in the Chinese economy today. But I think just based on the mismanagement, I wouldn't even put Baidu on the second tier. But I think just coming down to the second tier list, I'm looking at some of these very, very competitive companies like Pinduoduo. Right now, I think if you can cross the hurdle of how they're gonna grow so quickly, so profitably, and you believe in their numbers, I think Pinduoduo is also extremely undervalued. Also another tech company, I don't know whether you consider them tech company, but Xiaomi has also been doing fairly well. I think Xiaomi is really in this sweet spot of being both the tech software and the hardware integration. Value proposition that they provide to the marketplace is pretty incredible, I must say, from a consumer point of view. And if you look at Xiaomi's share price, they are currently at all-time high. A very different story compared to the whole Chinese tech bear market. So I think a lot of investors are also front-running these expectations of this hardware-software integration. And I think for the rest, I think it's really dependent on the expectations and also the valuation that you are being dealt with. So I think that's just my general thoughts about Chinese tech today in 2025. And do feel free to leave in the comment section down below on what are your expectations and what do you think of this new renewed optimism around Alibaba. And I'll see you guys in the next video. But more importantly, I'll finally see you guys on the moon. Goodbye.